and welcome to the F&O Show on BloombergQuint Live, India's first digital live streaming business news service. I'm Darshan Mehta. Good morning, Agam.
Good morning, Darshan. I'm Agam Vakil. Let's take a look at the headlines. Markets extend their gains for the third day. The Nifty is back above the 12,000 mark. All sectoral indices in trading with gains, and the volatility index remains flat. Open interest is rising in stocks like Cholamandalam and Tata Global Beverages towards fresh long positions. Oil marketing companies build on their gains on Tuesday as crude prices continue to correct. HPCL, BPCL and IOC gain between 1 to 3%. And TBS Motor Company is the top gainer on the Nifty Auto Index, which is in turn the top sectoral gainer. And Cipla is likely to report a healthy third quarter with high volume products in the US driving its operational performance. But what do we have in terms of the market session?
Yeah, it's decent. Seldom do we have such a move coming in after a massive move. So yesterday we had a 250, 260 point move. And today again we are up almost another 50. So there is follow-up buying that's happening as far as the Nifty is concerned. And you can see the trend across the board. The Sensex, the Nifty Bank, all of them are doing well in trade. Let's take a look at the Nifty futures and see exactly what it's doing. Again, it's trading at a discount of 20 points from the budget day. The discount has actually come off significantly from a premium to a discount. Open interest build up of 6% on the long side for the Nifty. Pull up the Bank Nifty, and that's the one that is seeing real traction and fresh buying. It's trading at par absolutely. Open interest build up of 10% on the long side. Now let's take a look at what's happening in terms of positions that are being created. We are at the 12,300 mark in trade. So from 12,000 from 12,000 to higher level, it's the call writers that are active, and from 12,000 to lower levels, it's the put writers that are active. So we are at that level only. Over the past few days, we've seen that the call writers were taken to the cleaners. There seems to be a lot of put writing that's happening on the counter at the 12,000 level. So it's a bullish trend that's coming in. Call writers writing in at the 12,000 and 12,100. Over the past few days, yes, their positions have been cut because of the monster 300-point rally that we've seen, and put writers have become much more aggressive in trade. But stock-specific, Agam, anything that you're spotting?
Absolutely. There's a whole list of stocks which will be trending today and on the back of gains and open interest. So let's pull that list up and take a look at where we are seeing a lot of traction. So Tata Global Beverages, of course, is the obvious one here because we're looking at a lot of strength. We're going to talk about that as well in today's day of trade. It's up around 23%. Cholamandalam Finance, it's up 3%. Tata Chemicals is catching up. Don't forget, it's not too far away from Tata Global Beverages in terms of the kind of gains it has seen over the last 3 months. That's also seeing an 18% increase in OI. Ujjivan Financial Services is the other one that I do want to address, as is the case for TBS Motor Company. So the top gainers in terms of open interest are all looking at fresh buying with good momentum coming in terms of their spot prices. So we'll be watching out for a whole host of them. In fact, we'll be talking about a few of them as well. Are we looking at unwinding? Unlikely with respect to too much. There you have it. Well, not looking at too much unwinding at all. Torrent Pharma looking at about a short covering. But say for that, it's looking like a very, very steady market in general, Darshan.
Okay, now let's take a look at some of the stocks that we will address in the show today. The first one obviously will be Tata Global. While the numbers actually didn't surprise the street much on the positive side, it's seeing significant amount of fresh buying that's seen. Probably the 27% growth in the Starbucks division and the strong performance in the international business probably helping. TVS, I don't think there was any surprise. The numbers were in line, but the number of shorts that were built ahead of that is getting unwound. So it's massive amount of short covering, then leading to fresh buying. And Ujjivan Financial probably is the star of the day, one of the top gainers on the F&O side. So we'll talk about those counters. But before we get our guest on the show, here's a reminder: if you have any queries regarding futures and option market, you can call us now on 022 45404141 or write to us on Twitter, YouTube, and with the AskBQ hashtag, and we'll take all your queries there.
Okay, it's time to get in our experts then. And joining us today is K. Subramanyam of Altamount Capital and Navneet Daga of Securities on the show. Good morning to both of you. Thanks for taking the time out. Navneet, I start with you. Where do we go from here? What's the way forward for the benchmark indices?
Well, hi, good morning, Agam. Look, it's been all over the place in the last couple of days, and we've seen this big, massive crackdown and then a big monstrous rally that we've seen in the last couple of days. So we're just standing at the middle of the entire move. That is basically from 12,400 to 11,600, just 400 points ups and downside. So we're just standing at a kind of a middle of the entire trading range. So if you look out the structure, it's looking likely that the way the heavyweights have come back, it doesn't look like that the gains likely to be given up that easily, because the walls have corrected very sharply. We have seen a lower input writing happening, as well as the heavyweight kind of a participation from the bank Nifty, and as well as heavyweight contributors like Reliance and HDFC Bank. It's looking likely that their markets are in for some kind of a consolidation. It doesn't look like that we are falling off the cliff below that 11,700 mark that easily now. And similarly, on the upside, we're likely to face a lot of hurdle zone in that range of 12,000 to 12,050 and then 12,200 range. So my strategy would be basically either it should be stock specific and use the index rallies on the upside to liquidate or be light in the market.
Okay, that's the view that's coming in from Navneet. Mr. Subramaniam, what's your strategy as far as the indices are concerned?
Yeah, thanks, Darshan. Well, we've certainly seen a pretty strong short covering rally in a couple of days, and we have recouped all the losses that we saw on Saturday. But going forward, in fact, today I expected probably the market might pause around this 12,000 level, but that has not been the case. And we are seeing some pretty strong momentum, and now we are clearly heading towards levels of 12,100 thereabouts. So my focus probably will be on a bank Nifty, which are the one which has really seen some very severe crack. But looking at the buying that we are seeing some of the private sector banks and the fact that we also had some massive shorts in the bank Nifty, I'm giving calendar bull spread, I mean, which of course involves buying of a February 13th contract, strike contract of 31,000. That's quoting around 240, but also correspondingly sell the current settlement, that is February 6th, that is one which is ending. Recommend selling of a 31,000 strike contract of that February 6th contract, which is quoting around 90. So the basic idea is that now tomorrow's expiry, and obviously if I would like to take the momentum, but in the eventuality of any profiting coming about, this contract which is expiring tomorrow, the premiums will vanish very fast. So one could probably take advantage of the fact that the premiums are still sluggish, and doing this calendar bull spread, keeping net cost comes to about 150, keeping a target of 300, and maybe one could keep a stop loss of 75. This also has an advantage that one can keep the position, ride the momentum, and probably even keep on till the next week, so that we take full advantage of expected rally, which I think which should happen, and take the market past, bank Nifty past the levels of this 31,200 levels.
Okay, well, for those who are not aware of this one, a calendar bull spread is comprised of a short option in the near-term expiration cycle and a long option in the long-term expiration cycle. And both options are the same type and use the same strike price. And of course, in this case, as Mr. Subramaniam has already explained, that he is buying the 31,000 call for February 13th, which is the far-out option, and he's selling the 31,000 call. This is the February 6th one, which is the closer one. And as you can see, the target is 300 with a stop loss of around 75 points cumulatively. So with that, I'll go across to Navneet as well, who has a short strangle on the Nifty. Navneet, can you take us through your strategy today?
Look, as I explained, basically my thesis of my strategy is a short strangle, and which I'm selling in a strike of 12,200 on the upper side for the monthly expiration, and similarly selling in 11,700 puts on the lower side for the again a monthly expiration. Largely the thesis is basically we are done with a kind of a big volatility event, which was a budget event, and secondly we are done with largely most of the earnings season has done through. So no major news flow to for the markets to make a big swing or a dash on the either side. So you can eat up the kind of a premium that you are getting around 130 to 135 points, a kind of a decent premium that you are getting in this strategy, and keep a strict stop loss on the spreads towards 185 levels. If the spreads widens towards that kind of a levels, we expect that the markets are either looking for a breakout or a breakdown kind of a trade, and one should look to exit in that case towards the 185 levels on the total spreads as in stop loss levels. I expect the market to expire between the range of 12,200 to 11,700 in this expiry.
What about individual stocks, Navneet? Which are the stocks that you would want to speak on?
Look, I was looking at the overall financial space, and some of the pockets within the financial space are making a kind of a big breakout. And one of the call was Ujjivan, but the stock has already seen a big run up to in the from the morning trade itself. So probably, but still, it's looking likely that there is a lot of room on the upside. And I'll look for a stock towards, if any mild correction towards 400 levels has been. If we're able to get into that trade, we should look to buy into that weakness, and probably keep a strict stop loss on the lower side of 385 and look for an upside target somewhere into 425 to 430 range in this expiry itself. The second stock on the long side would be on likes of Britannia. The overall FMCG, if you look out, the FMCG index has seen a big breakout. Likes of HUL, Dabur, or all of them are creating fresh new life highs, and the Britannia is just about to wake up from the kind of a consolidation breakout. And to my understanding, the kind of a position shifting that has happened, it's looking likely that the stock can move towards the 3450 odd levels. So one can still initiate to be on the long side with a stop loss on the downside of 3200 on the Britannia futures.
Okay, let's go across to Mr. Subramaniam then to take his views. And he has a bunch of covered calls that he's playing. Mr. Subramaniam, can you take us through your stock calls for today?
Yes, Agam, couple of covered calls, that is keeping the fact that, as I mentioned, the market has given a sharp rise and we could see some consolidation profit taking. So covered call would cushion any of the fall that happens with the broad trend now remains up on these stocks. First, with Tata Steel, is seen some severe crack, particularly on the back of those coronavirus fears, and I think a lot of long inventing shorts have crept into this into the counter. And but I think closer levels of 440 is a decent bet, and one could play for the upside. And so recommending buying of the futures, sell a 450 strike call. Now the premiums are very rich; it's almost 19 rupees. So keeping a target of 470, and one could also keep a stop loss of 440. And Bharti Airtel, the post results saw a minor dip, but again seems to be gathering momentum. And broadly, the stock is expected to outperform the overall market. So one could again do a covered call here, buy the futures, sell a 530 strike call that's quoting into 30 to 14. Keeping a target of 540, and maybe one could keep a stop loss of 510.
Let's discuss some of the stocks that we had indicated earlier. So there is Tata Motors, there is TBS Motors and Ujjivan. There is TVS Motors, that is something, Tata Global, sorry. So Tata Global is the first one. It's rallied up almost 6% post its numbers. Earnings were steady. But let's see what our experts have to say on that. Mr. Subramaniam, I'll start with you. It's already rallied 7%, high open interest build up. If someone, what should one do? It's at 408 right now. What should one do at this price? Should someone take an entry? Should they wait for it to cool down and take an entry, or should they short? What's your ideal strategy?
Well, Darshan, I think this stock is now making some very interesting moves, and this has to be seen in consonance with Tata Chemicals. Now, that is where the real story is, because I think the consumer division of Tata Chemicals is going to merge with Tata Global, and both are moving consonance. And I think the stock is clearly heading upwards, though in the very near term. In fact, it has been looking overbought, but it just negates everything and starts going up. So I would probably advise anybody holding a position, maybe keep a stop loss of 395 thereabouts and hold the position. Probably one could again wait for some sort of correction to enter the stock, because we have seen some very massive rise on the back of some open interest. So in the eventuality of any long unwinding coming about, the stock might dip out at $10. But broadly, the stock seems to be on a very strong uptrend, and probably could reach levels of 425, 430. So for the immediate short term, as I suggested, anybody having a position can have a stop loss of 395.
Okay, well, that's your view on Tata Global Beverages, and from there on we move on to, of course, Ujjivan has already been discussed by Navneet, so I'm going to take up TBS Motor Company. Well, this is where we've seen again about a short covering, if we can call it that, because yesterday's day of trade was one where we saw a very sharp hit coming in, and today we're looking at a recovery. I'm sure that there are a handful of shorts which are being covered, but open interest is indicating fresh longs too, which is taking place in TBS Motor Company right now, which is up nearly 4%. Navneet, what's the way forward on TBS Motor Company? How would you play this one?
Look, to my understanding, if I look at the weekly charts very keenly, it gives me a feeling that basically the stock is stuck in a kind of a consolidation band, and on upper hand, somewhere in the range of 480 to 500 is seen a multiple hurdles out there. So it doesn't look like that, it will, in a hurry, it's just jumping about that. So to my understanding, if you are being on the buy side, just look for the range of somewhere into 475 to 490 range. That's where you should look to liquidate the stock on that. And take the momentum trade only about the stock started to trade about that 500 zone, or either you wait for a weakness towards a 440 odd mark. That's where it's got a lot of support zone. So that 50 points band, trading band, if somebody can play on, it makes sense to buy on the support level as well as on sell on the resistance. It's a kind of a trade whereby you cannot jump and whereby breakout breakdown trade in a merit. It's in a hurry. So I'll wait for a consolidation, either breakout on the upside or either breakdown on the downside to trade on that.
Okay. All right. Well, let's very quickly move on to queries. And we have one from Tarun Arora. It's on another interesting stock, UPL. Oh, well, he says that he's bought the UPL 560 call and he wants to know what can be done with it. He's paid a premium of 15.9. It's currently at 14.8. So he's making a 1 odd point loss at this point in time. It's about 22 odd points away from it moving at the money. That said, Navneet, let me come back to you on this one. The 560 call on UPL, what's your view here?
I'm surprised the stock has been so much of under pressure even in the good times of the market. So it gives me a feeling that basically the stock has not got much of an upside left in the near term. It's looking likely that any upside towards that 560 to 575 mark, it's likely to be capped, and it's a lot of multiple hurdles out there. So to my understanding, if you're getting a chance, since being in a momentum kind of a market, it's looking likely that it can inch up towards that 550 odd mark. That's where you should look to exit this trade and better shift to something else. It doesn't look like that you're getting in the money in a hurry and stock can surprise you on the upside. Doesn't look like that.
Okay, Harshvardhan has a view on Colgate. He's bought the 1360 put at 34.40. Let's pull up the 1360 put for Colgate. I don't think it's very liquid. It's 1360 is at 23. He's bought it for 34, so he's down 10 rupees. What Mr. Subramaniam, Colgate 1360 put, what should he do? He's down 10 rupees.
Well, ideally not a counter where you play in options, because this has a tendency to be very range bound, more of an investor-oriented stock. So I would probably advise him to maybe exit the position and get into some high momentum stock rather than into a stock which is more of range bound nature.
Well, moving on to a question from Rahm, and it's about Axis Bank. He's bought the Axis Bank 720 put. The question is, can I hold or exit? It's around about the same place right now. 720 put. All right, Navneet, why don't you take us through this particular option? What would you do? Would you hold on to this position? Do you see more weakness in Axis Bank?
In fact, I don't see much of a weakness on Axis Bank. It has taken the supports at somewhere in the range of 700 and multiple times, almost 3 times on this last 3 months. It has made a formidable bottom in that range of 680 to 700 range. It doesn't look like that the kind of weakness and an overall strength in the private banking space. To my understanding, it should start to outperform, and then it can get into the trajectory of somewhere into 740 to 760 zone. So to my understanding, it's an exit. Even if you're getting at this point of time, even it is near to the cost money, you should look to exit in this trade.
Okay, 2 stocks in which I want an opinion, MotoCorp and one stock which is not in the F&O, that is Avanti Feeds, which has fallen significantly, but it's a very high institutional investor stock or a retail stock, so there is a lot of traction and following on this counter. Mr. Subramaniam, anything on MotoCorp? It's down 2%, and also if you have a view on Avanti Feeds.
Well, Hero Motor, very near term, I think it has some very strong support closer to levels of, I think, 2400. So probably a small up move could be seen, but broadly an underperformer. As far as Avanti Feeds is concerned, yeah, it's seen some pretty dismal numbers, and we have seen some crack in the counter. But I think this counter has the the potential to regain its strength, because close to the levels of this I think 600 thereabouts. In fact, a lot of support is there. So one would probably just wait out this selling pressure, and I think this has that this could see the stock could regain some sort of strength and gain upwards. And so current juncture probably just an odd day where we have some negative this thing, but probably the stock strength seems to be upwards. So one could probably see this regaining of strength coming about sooner than later.
Okay, well, on that note, I am going to take a moment to thank both our experts, Mr. Subramanyam and Navneet, for joining us and taking us through their views on the markets and solving a whole host of our queries. Don't forget to go through our futures and options pages on our website, BloombergQuint.com.
Okay, with that, it's a wrap on this edition of the F&O Show. For more views and updates, stay tuned to BloombergQuint.